Warm welcome to everyone on this webinar series, What's Cooking on Data and Driven and Digital Agriculture. This is now the 55th webinar in this series. In this series, we invite innovators, thought leaders, practitioners, and development agencies which are working to transform agriculture and food systems using data-driven and digital agriculture approaches. As you know that post-COVID, this issue has become very prominent, and we have received almost like 48, 49 requests from countries about how to transform their agriculture and food systems using data and digital technologies. And in this connection, we have trying to learn very rapidly from innovations because things keep on changing very rapidly. And it's important to be develop a knowledge and learning platform. This particular platform is running on our open learning campus, which the link on which Vivek, can you put that link out on the series? So all the webinars and including today's are available on this link. These are accessed by what you call it, almost like 5,500 people globally. So even the people who have not joined today physically in the webinar, go back and attend these open learning campus webinars, which are recorded and are shared with a much wider audience later on. They are also part of an open learning campus learning offering where people learn at their own speed about what is happening in this field. I just would also like to thank our partner IFAD. This is a very important webinar today, which we are organizing jointly with our development partner IFAD, and they are going to be moderating and running today's sessions, and it is on innovations in rural digital financial services and remittances in Africa. This is a very important topic, sometimes very neglected in the development field, and with huge advancements in mobile money, it's possible for rural population to really access a number of financial services through this channel. And IFAD has a very exciting work program on this, which they have developed over years. And it will be great to hear from all our partners from IFAD and their partners as well on how this is shaping up in Africa. I would also like to announce the next webinar before we start. Our next webinar is being jointly organized with our development partner FAO, and it is titled Eyes in the Sky, Geodata for Improved Water Management and Climate Action. Vivek, can you put that slide on? Yeah. So just to let you know, same time next week, please tune in again. And I'm very much thankful to all the people who have joined today. And I would now pass on to our partner and co-moderator for this session. And it is Gladys Morales. Gladys is the Senior Innovation Advisor at the Change Delivery and Innovation Unit at the Office of the President and the Vice President of IFAD. She has led the digital transformation of government and UN agencies projects in Latin America, Asia, and Europe. Before joining IFAD, Gladys was advisor at the International Poverty Reduction Center in China, where she also led the design of digital platforms and established a lot of partnerships and knowledge networks there. She is a graduate from Executive Program on Digital Business Leadership at Columbia Business School, and also has done an executive program in artificial intelligence at MIT here. And she has a master's in development economics and international cooperation from University of Rome. And so I would like to add that, and Gladys will introduce all the panelists and also introduce the subsequent discussion. Over to you, Gladys, and very glad to have you here.
Thank you so much, Parmesh and Vivek, for inviting the International Fund for Agricultural Development to co-host today's event, and thank you for that detailed introduction. I'm going to start right away because we have Thuraya that has to reach a plane. So today's session on innovations in rural digital financial services in Africa, we will be discussing how digitalization and access to data in rural areas have enabled the design and delivery of a new generation of financial services, including a diversity of credit, savings, payments, remittances, and insurance. These services can reach rural people and make it possible for them to build livelihoods and resilience against social, environmental, and economic shocks, including those deriving from COVID-19. In particular, remittances have played an enabling role in promoting financial inclusion and livelihood development in rural communities. While most people are served by traditional financial services providers, fintechs are making the biggest push in innovations in Africa. A large portion of these fintechs have business-to-business models and are partnering with banks and microfinance institutions to bring new services to the market. Countries like Kenya, Uganda, Nigeria, Ghana, and Tanzania are leading the way in the region with mobile money ecosystems that are acting as big enablers of innovations that leverage digital payments platforms. In addition to the contributions from our colleagues from the World Bank, today we will be listening to experts from IFAD, MFS Africa, and Bank Al Maghrib, the Central Bank of Morocco. Without much further ado, please allow me to introduce our keynote speaker of today's session, IFAD's Director of the Sustainable Production Markets and Institutions Division, Thuraya Tricky. Thuraya also oversees IFAD's recently created private sector unit in charge of non-sovereign private sector operations and initiatives. Thuraya, the floor is yours.
Thank you very much, Gladys, for a very good introduction. And good morning, good afternoon, good evening, colleagues, depending on what you are. I would like to start by saying that I'm extremely happy to be given the opportunity to open this event. Actually, when the team reached out, despite that I had a flight to catch, I jumped on the occasion. And I would like to confess that financial inclusion and access to financial services is something that is very close to my heart, because throughout my career, I managed to see the wonderful things and the development benefit that you could achieve through proper access to financial services. And maybe I can start these opening remarks by reminding all of us of the great progress that has been already achieved. Between 2014 and 2017, according to the latest Findex figures, we have 511 million more people who have opened an account either in a financial institution or with the mobile finance providers. That brings the share of people with an account to 69%. And it's quite actually rewarding to see the efforts of different institutions, including IFAD, the World Bank, but many, many others that are, some of them are with us today, others are not. But let's also face it, the challenge is still very important. There's still 1.7 billion people who are unbanked, do not have an account with a formal financial institution or with the mobile finance providers. A large number of these people live in rural areas, and a larger even share of them are poor. And this is where IFAD niche lies. We are in the business of helping and empowering rural poor and small-scale producers to improve their access to finance. And of course, when we talk about access to finance, we need to remind ourselves that the issue is actually much more important. It's about financial inclusion, which means access, use, and quality of the financial services. It's about access, but it's also to credit, but also access to payment services, to savings, and to insurance, among others. Today's event will also be covering remittances, and I think it's a natural link to the topic of financial inclusions, because what is very important is that we provide those who are unbanked and the rural poor, who is the focus of IFAD, with actually the relevant and the affordable financial services they need. So they need a lot of financing, but that also means that we need to leverage more the 500 billion that are today sent by 200 million migrant women and men to the 800 million families. And I would like to remind all of us that half of this money ends up in rural areas. So leveraging the development impact of remittances is extremely important in a context where ODA for agriculture has been hovering about 5%, where we know that Small-scale producer rural poor are getting a very limited share of development finance, of private sector finance. So leveraging more remittances is extremely important, and that's where digital financial services and other innovations play a critical role. And I hope that our discussion today will not only limit it to digital financial services, which are extremely important and have been a major driver of better financial inclusion around the globe and for the rural poor. It's also about doing things differently in an innovative manner that makes these financial services affordable and available to them. IFAD has been doing a lot of work in this area, promoting better access to credit, to savings, empowering people working on both supply and demand side issues, with the ultimate objective of enhancing rural poor and small-scale producers' productivity, their benefits for market participation, their resilience to climate change and other shocks. We have recently approved our first ICT for this strategy. We have a new also rural finance policy that my colleagues will be covered, and we've been also at the forefront of leveraging remittances, and I'm very glad to see my colleague Pedro who will be talking. He's the one who always reminds me that remittances put food on the table for a lot of this rural poor. And today he will be sharing some of the work that we have been doing. But we'll be also hearing from many other partners. I am really sorry that I will not be able to listen to all the conversation, but I understand the event will be recorded. So I promise that we'll be listening and following up. I look forward to a very fruitful conversation. Happy to join the World Bank, and also very grateful for giving us this opportunity to share and exchange through this important platform. And I wish you all a very productive conversation. Thank you. Over to you, Gladys.
Thank you so much, Thoraya. And it's a pity that you cannot be with us for the rest of the event, but we really appreciate that you made it here, despite the fact that you have to go and catch a plane. Just to highlight very quickly, one of the most important aspects that you mentioned is how IFAD is working really hard to ensure not only digitalization, but to ensure that our approach is user-centric, and that the services that are offered are accessible and are affordable also in the long term. So with that, I would like now to introduce our panel. Please join me welcoming Mark Sousa Shields, Lead Regional Technical Specialist of Rural Finance and Markets at IFAD, Pedro de Vasconcelos, Senior Technical Specialist and Coordinator of the Financing Facility for Remittances at IFAD, Nika Nagavi, Director of Strategic Projects at MFS Africa, Dilip Ratha, Head of Nomad and Lead Economist of the Migration and Remittances Social Protection and Jobs Global Practice at the World Bank. Brenda Gunte, Senior Technical Specialist of ICT for Development at IFAD, will be moderating the panel. Apologies, I won't be able to go into detail in the biographies of my colleagues and the panelists because of time, but please welcome, and Brenda, over to you.
Thank you so much, Gladys, and glad to hear from Thoraya and also Pamesh during the opening of the sessions that we're not only just looking at digital innovations, but also looking at the role that digital finance and remittances are playing a role in supporting rural transformation. And in this panel, we'll be having a conversation about not only just IFAD experience on models, as well as policy priorities growth. We're also going to
Brenda, you seem to have some you seem to have some connection problems.
Can you hear me now?
I think she should turn off her camera. That will allow.
Brenda, yeah. Can you please turn off your camera?
Hear me now, Gladys?
Yeah, let's try it that way.
You can hear me?
Yeah. That's perfect. Thank you. Yeah. That's much better. Thank you.
Okay, thank you. Apologies for that. So the other issue that we're going to be discussing in the panel is also about contribution of remittances in diaspora investment in terms of bringing that rural financial services and expanding digital innovations in the rural areas. At the end of the panel, we'll go through a Q&A session where we can actually ask specific questions to either a panel member or a general question that we'll be asking in the Q&A. We'll try as much as possible to answer most of these questions. And if they're not responded, all the responses will be made available after the webinar. So before we start, let me go to you, Mark, in terms of you represent IFAD in this conversation, and you've been very much involved in terms of bringing in some of the innovative models and policies and some of the working with the regulatory frameworks to support rural finance. Can you tell us some of the examples from IFAD on innovative models, policies, and even regulatory frameworks that have supported to improve access to financial services for the rural poor, and also how digital technology is an enabler in this area? And it's also very great to hear some of the challenges that you see in this context where World Bank and IFAD could be able to support. Over to you, Mark.
Yeah, thank you, Brenda. I want to start by saying I'm only the lead technical specialist for the NEN region. My colleagues from other regions are here today, and maybe in the question and answer they can chime in. I was asked to discuss today a little bit about what's cooking in digital finance at IFAD, and I thought I'd give some examples. But first, I wanted to just echo a couple of thoughts about our that Thoraya mentioned about our inclusive rural finance policy, because it is germane to the question of what are the challenges and entry points. And you know, as policies of these types, like good recipes, they're often built on what we already know how to do fairly well. And in our case, it's our comparative advantage in community-based financial institutions and value chains that I think are really important. But you know, the policy also spent a lot of time in development and looking at the trends and innovations, recent and a little bit older, emerging in ICT 4D, both financial and non-financial. So I think that adds some spice and ingredients to our kitchen that we didn't have before necessarily. So I think some of the key entry points for expanding smallholder financial services generally and digital financial services specifically, there's kind of like the digital financial service wedges that tend to be different in each market that kind of expand the national market for digital financial services. 6 stand out that have been mentioned already: payment services, mobile money, peer-to-peer lending, government-to-people payments, remittances, and advances in cash in, cash out, and point of sales networks. Now, they're found in combinations. Some lead, some don't lead. They all have challenges, too many to discuss here, obviously. But we found that there were 3 sort of general guides to developing markets for smallholders that I think are really germane. One, being people-centric. Understanding demand is absolutely fundamental. We spent a lot of time helping supply over the last 5 or 6, 10, 15 years. Now we're thinking, great market intelligence, where to put the wedge and what wedges to bet on. And if you can understand demand, you can have sustainable services. It's like any other market. Second, catalytic investments. You know, how can we leverage, how can we deeply wedge into a market, split it open, and help service providers actually see and then develop the opportunities? And third, regulatory policy and infrastructure investments in financial, commercial, and communication sectors, or enabling environment investments that facilitate kind of specific digital financial service outcomes. So people-centric, catalytic investments, and enabling environment investments, those are the 3 guiding principles, not by coincidence, of our new rural finance policy. Now, you asked me quickly to go over some tasty morsels from our kitchens. Well, one program that we like to cite is in Mali, and the FEAR program has developed a diaspora crowdfunding application to support small-scale agro-producers and entrepreneurs. The idea was to tap Malians in France to provide affordable capital to local smallholder producers and micro-entrepreneurs. It took the effort of a community of stakeholders, as is often the case in market development, organized by the IFAD program, to develop this pilot. It was an inclusive financial institution network, of baby loan crowdfunding platform, specialty market research groups in France, all came together amongst others to help do this pilot. A really great example is in Malawi in the Pharmacy project, which supports Kumo. It's an MFI and it supports them in digitizing biometrically secure transactions for remote savings and loans group. very far out into the remote areas, including loan application review and approval. And QMO also offers standardized virtual savings and loan groups training session, really brings down the costs of providing these services. And just a couple of programs I'd like to mention that are on the preparation board. They're not yet cooking yet. One is in Palestine, where it's a newly designed program. It's not approved, but it includes demand-side market intelligence to encourage potential partner financial institutions to develop and expand digital financial services with the support of a challenge fund that can take a financial institution from opportunity to identification through to product launch. Another example I'd like to cite is more about how we designed a project. We did iGreenFin 2. It's $300 million GCF program in 7 Great Green Wall countries. And we did a pioneering digital smallholder climate adaptation loan demand survey with 700 smallholder responses in Sudan, Nigeria, and Ethiopia. Again, trying to figure out what the market wants so we can serve it well. And then just finally, we're going to be piloting smallholder climate adaptation loan credit risk analysis and climate impact measurement certification app in partnership with a German fintech called Yapu and BNP Paribas in half a dozen African countries. We have other examples in LAC and in APR, and our colleagues are here today and maybe we can tap them in the question and answer period as needed. So to conclude, IFAD's employing a lot of different tools, collaborating with diverse stakeholders, and we're guided by a new policy which is market-oriented, look for catalytic investments, targets investments in the enabling environment to facilitate sustainable financial services for smallholders. And digital innovation is increasingly at the core of this work. So thanks for the opportunity.
Thanks so much, Mark, for that great response. Some of the points that you've raised as you're talking about digital financial wages that have actually supported and to expand financial services into rural. Key things that you have mentioned: people-centric, understanding the demand from the field, and also looking at the catalytic institutions. And the great example that you've provided about Mali in terms of crowdfunding, which brings us to the next question to Pedro. As you're working on remittances and diaspora investments to enable rural financial services, especially during COVID, where it was at the prime of now where challenges of how do now remittances still continue to support rural financial services. What are some of the lessons that you have learned during COVID, and how you've seen digital innovations contributing to the access, especially to digital payments and financial services for the poor? And what do you see as some of the key initiatives that will still be vital for economic growth post-COVID? Over to you, Pedro.
Thank you, and thank you so much for this opportunity. It's very difficult to answer all that under 5 minutes, but I will try. And I think this series is called "What's Cooking." I would like is to show what is actually being served by 1 billion people, sending and receiving remittances. This doesn't wait. And I think it's also important is to highlight the difference between remittances and diaspora investment, as we understand how COVID impacted that and how the mechanisms can serve. Just as a reminder, remittances that are sent are mainly addressing the families' SDGs back home, daily needs. Diaspora investment, on the other hand, that might sometimes come from the same people, are the support to the communities of origin. It might be to a group or to an individual, and it uses a different type of systems to do that. But the nature of the two flows are different. I actually almost equal in size, but I think it is important. And it is important particularly when we start thinking about the development impact, because that's the point, is why are institutions like IFAD and others working in this? Where is the real development opportunity? Remittances are doing a lot already. It's wrong to think that they're not efficient to the way that we would hope. They're supporting, and this was highlighted during the crisis. But the development opportunity, I will specify particularly for remittances, resides actually into the correlation with more financial options. And this is, I think, what is central to our discussion. Most of the family members that receive remittances or those that send are out of the formal financial systems, do not have access to that. Yet the demand exists. The demand exists by having access to having an income like remittances pushes you to want, need financial services such as savings, credit, insurance to be able to address their daily needs. And I think this is what is important to highlight in our approach of looking into remittances and how this can be integrated into our developmental approach. So at IFAD, we've been supporting many viable business models to try to support this, to give more options for these families to use their funds. How can we correlate this again with savings, credit, and insurance? This doesn't go just with policies. You need to push for these business models. And it's been done for a long time now, over 2 decades of linking remittances, as I said again, with savings or credit. And what we've seen with COVID, in response to your question, is also a high demand for this services of remittances, but to be digitalized. In a way, there's been the lockdowns that were at the beginning of the process really boosted that demand for this, what we call, high touch, high-end services for many of their families to be able to just simply continue supporting their families back home. And this is basically what we've been also trying to promote, particularly with the private sector. There is no doubt that this digitalization that has occurred is here to stay. The change now is done. It's very difficult to change to the minds of many of the senders, the 200 million senders, to change their mind into the ways of sending. COVID has allowed that. So we are now de facto in a digital trend in remittances that we don't believe it will go down, and I think our colleagues, practitioners, will able to confirm this. But what can we do since we're going to what's cooking? Well, with the public sector, we need to support an enabling and conducive environment to support the remittances ecosystem and ensure the integration of remittances in their financial literacy plans, for instance, to make sure that correlation between digital financial services and remittances is integrated. Many times this is omitted, and it's a missed opportunity, obviously, and this is what we're trying to also support at the policy level. What is extremely interesting is what is cooking is what we're doing, I think, with the private sector. And as a direct response to COVID, we are right now kicking off 18 projects with private sector entity in Africa and addressing European to Africa corridors, but as well South-South corridors, to make these remittances services go beyond the impact that they already have in supporting the millions of families' SDGs. Through this project, we're trying to accelerate the use of digital products, enhance the digital payment ecosystem to support maybe international remittances. Maybe just to finalize, since I'm reaching my 5 minutes, I just want to say some of the examples of what we do, because we believe the private sectors are the ones that are going to lead the way. They need to provide these services. These services need to be viable in order for its development impact to occur. In Gambia, we're supporting MNOs in expanding e-wallets. You can link remittances with e-wallets, and that opens a whole new world for the families that receive it, because you receive remittances there, but the e-wallets allows you to have access to other services. And this is where the opportunity lies. In Senegal, we're partnering, for instance, with digital aggregators in support of end-to-end remittances services linked with goods acquisition. So the remittances, without touching that money actually, but the way you channel that, you're opening again a new world, a new whole other services for the recipients. This is again where we see the opportunities. In Ghana, for instance, most importantly, we're partnering with 2 financial institutions that are creating better linkages with financial services, remittances, and facilitating that through digitalization, and also providing financial literacy training through digitalization. So this is a whole package, a whole sort of product that actually works. It's going to be tested. In some cases, being scaled up. So it's not just about pilots. We're not discovering sliced bread here. There's this being business models like this going on, but they need to be scaled and adapt. And I think I will finish there. This is the the sort of the area of type of products that digitalization is now allowing in the remittances ecosystem. And I believe my colleague from the private sector later on will emphasize a little bit more on these examples and the viability of this product. I'll leave it here, Brenda, and of course, free for further questions later on.
Thank you so much, Pedro, for that perspective, and great that you are, you have set the scene in terms of the role that the private sector is actually playing in this space, especially in terms of creating that participative environment where different stakeholders can actually come together and integrate these different services to support on digital financial services for rural areas. So Nika, I know that MFS has been working a lot in this space. There's a lot of great work that you're doing in different countries. Could you share with us some of the lessons and innovations that have emerged as you engage with different stakeholders, especially in Africa, to enable digital payments, creating that space for digital economies, and supporting overall financial services? What role exactly have these partnerships played, including working yourself as MFS and other players to scale up financial services in rural areas and removing barriers, especially for financial inclusion? Over to you, Nika.
Perfect. I think before I start, I want to maybe couple of seconds talk about who we are and where we sit in the value chain. We are a B2B company. MFS Africa operates the largest digital payment hub on the continent. We started in 2010, and since then we've played a key role in as an ecosystem enabler and orchestrator across the continent. We've built a network that connects over 320 million mobile money wallets across 37 African markets. And in doing so, we've enabled millions of Africans so far to transact and exchange value with anyone else in Africa and anywhere else in the world. Our operating model is very simple. Through a single API connection, businesses and consumers can send money or get paid in every corner of Africa. I want to highlight that these digital settlement and payment rails that we're creating are not exclusive. They are open to all of our MTO partners and anyone who has a digital strategy and want to send remittances digitally. We talk about digital remittances a lot, and we know there are so many benefits of digital remittances, including faster, safer access to for diaspora, also for their family back home, and reduce costs and speed up delivery. But we need to make sure that whatever you're building is accessible. And at MFS Africa, we believe that in a world that the fragmentation is holding us back, access is the only currency that matters. And by access, we mean access to options, to scale, to opportunities. And accessibility means different things for different customer segments. For a tech-savvy, rural, urban customer and salaries who have access to smartphone or even basic phones, accessibility means being able to move funds from a mobile money wallet to a bank account, to a savings account, to send it to purchase something. But for someone else who is in an ecosystem that is not mature, who's not very tech savvy, who has lower financial literacy levels, that means access to instant cash. And we need to ensure that that's at the forefront of any innovation that we do, that there's no one size fits all. You have to look at the context. The context matters, the customer matters. And regardless of where you sit in the value chain, you have to be customer obsessed to understand their needs. And in terms of innovation and how we think about it, and through this partnership that we have with IFAD, we're looking at new ways of unlocking opportunities for diaspora and their families back home. For instance, Pedro spoke about Gambia. Gambia is a market that we're invested in ensuring that we can change the narrative for that market. It has the lowest level of financial inclusion across the continent in comparison to other markets in the continent. And there, you need a different approach. You need to think about financial literacy there to ensure that people have trust in the digital channels. And that's not bread and butter of a lot of MTOs, a lot of hubs, but we're invested in this, and we think an ecosystem works where everyone has equitable access to options, and accessibility really matters in that term. The other thing that we're doing, and the other partnership that we're doing, which is beyond remittances and linking remittances to more sophisticated financial services, is around the work that we're doing on insurance. And when you look at Africa, we around $40 to $50 billion are to safeguard these remittances, to ensure that your duty of support as a migrant and as a diaspora is covered, do not exist. This is where we see a very great partnership model between private sector and public sector. And with IFAD help, we are going to test this insurance product that safeguards these remittances. That means that as a diaspora member, you are not worried about what will happen to you if you're out of job one day, if you're hospitalized and you cannot send money back home. And we need to really think about remittances as a vehicle for enhancing a lot of livelihoods, and how we can protect that, how we can ensure that these flows are linked to things that are linked to financial services that really empower the recipients, the senders, and remove a lot of frictions in the value chain. Yeah, I hope that covers, and I hope I haven't spoken more than 5 minutes.
No, Nika, thank you so much for that perspective. I like the statement that you said, access is the only currency that matters, right? For some that are not working in this space, we would actually look at the technology, looking at other aspects that we think are much more important rather than the access itself, because that's always the most important thing to ensure that we don't leave anyone behind. And looking at access and investment, I know World Bank also has been working a lot in this space, promoting investments to promote digital economies, as well as in supporting governments to ensure that they do have the right regulatory authorities and regulatory instruments that could actually support rural finance development. So if you look at the work that World Bank is doing in this space, what has been the role that you have actually been focused on, especially in promoting remittance in rural economy? And how do you envisage digital technologies, for designing rural financial services, supporting remittance flow in the rural areas? Over to you, Dilip.
Thank you. It's wonderful to see colleagues from IFAD, Pedro in particular, talking about excellent work on remittances, and especially with a focus on the rural economy and on agriculture. The first question that you asked, what the World Bank is doing specifically in this space, is almost close to zero. This is just a question of the focus that we have more on international dimensions. And in the country programs that we do, there is very little on internal migration and internal remittances. There is a lot more on every aspect of the economy. And in this picture, of course, the big picture that we tend to focus on shared prosperity, on reducing poverty, misses out an important element, that development of places, regions, countries, sectors, and migration are intimately linked. And migration and remittances, internal remittances in particular, are a great way of sharing prosperity between places. And that link is not properly harnessed in the World Bank programs yet. There are a lot of, World Bank being what it is, the scale of the work is incredible, and the history itself. So there are pockets of work, and some of the very creative pilot programs on this theme also have taken place in the World Bank, and with astounding results, but they have not been properly documented, focusing on internal remittances. So there was a project in China a long time ago in the early 90s, where they actually did an experiment. If you moved from a particular village people to the cities, or provided them all kinds of agricultural investment and tools and infrastructure, which one would have better impact? And the answer, Chris, guess what? I mean, the poverty reduction impact was way larger when they moved people, right? So there are pockets of experience like that, but there is not a lot. So more specifically on data, we know that internal remittances are very, very large. Internal migration is about 4 times the size of international migration, which we understand a little better because of all the border controls. On internal migration, there is very little data, very bad data. And then remittances sent by people internally from cities to villages and the other way around too, tends to be about 1/4 or less, sometimes even 1/5, 1/10 of the average size of remittances that comes from abroad. And yet, because of the large number of internal migrants, the poverty impact is very, very significant, perhaps larger of internal migration and internal remittances. The poverty impact is larger than that of international remittances. We have documented that in the context of the surveys that we did in sub-Saharan Africa in 6 countries. And we were surprised actually from those surveys. The extent of remittances not used for consumption was a surprise to us in Nigeria, in Burkina Faso, in Senegal, Kenya, Uganda, South Africa. It is surprising that large amount of remittances, significantly larger than we expect, goes into housing, and housing is not consumption. Let's get that straight. And then a significant part also goes into business investments. And then there is, of course, the human capital issues, education. We know that remittance recipient families have much higher enrollment ratios, much lower dropout ratios. And what is also interesting, in a recent book that we released from the World Bank's Nomad Trust Fund, it was a book by Robert E.B. Lucas. We released that about a month ago. It's called Crossing the Divide, Rural-Urban Migration. In that book, he documents that when male members of the family migrate, the remittance that they send more than offsets, of course, the loss of income that the person would have earned. But interestingly, male members migrating does not have much impact on education of the children, whereas women migrating, mother migrating, has a huge impact, negative impact on the children's education. So there are these kind of factoids out there, but there is actually more systematic work needed. I already mentioned about sharing prosperity. Remittances are a great way of sharing prosperity between places. And we have seen that time and again in the form of resilience of remittances. When the household back home, the rural economy back home is not doing well, whether it is because of a disaster or a drought or something more chronic, actually remittances act as an insurance, and they actually support families. So poverty reduction impact, the impact on people falling into abject poverty or even malnutrition and death, that actually is reduced significantly because of remittances. And during the COVID-19 crisis, we also saw that again. We were surprised, really badly surprised, with the resilience of remittances that we saw. Again, international remittances. If you ask me about internal remittances, I have no clue. No clue, because we have not monitored the data properly. And that brings me to the final point about digital remittances. We will talk a little bit more later. We know that digital remittances picked up quite significantly, and all the companies that work in this space would often say they have seen 60%, 70%, 400% growth in digital remittances. The point is, of course, that that comes off a very low base. So the more important dominant picture that affects the rural economies, in my view, is yes, everybody has access to, or a lot of people have access to mobile phones, but mobile financial services, the access to mobile financial services or access to financial services, and particularly banking, and within the banking, access to loans is very, very bad, very, very bad. And that comes out from Findex database as well. So there is a lot that can be done by leveraging remittances in that space to promote financial inclusion, and then to go beyond that to loans and to insurance products, particularly health insurance products. I think that could be a huge space, which would make a huge impact on poverty reduction, especially during the COVID-19 type pandemics. So that's all I wanted to say for this stage, and later I'll be happy to add more if there is any question for me. Thank you.
Thank you so much, Dilip, for that response, and great insights that you have brought in. As we're talking about remittances, one could be easily inclined to look at international remittances, but you have brought a different aspect in terms of internal remittances that happen within a particular country, and also their role in terms of supporting to improve the economy in that country, and how that spread of income is actually being used in different communities. Interesting to know about that. Most of it is used for housing and other aspects that are not daily consumptions. I think it would be great even for our audiences to hear more about that learning, and also maybe if we can share later on after the webinar some of the articles about this. So I want us to go to the next session, which is much more engaging with the participants and hearing and asking also some of the questions they're asking, just to respond to that. And I want to start from where you stopped, Dilip, and ask this question to Mark, which you are talking about, that some of the role that remittances is playing, especially when male members migrate, and then you have female family members that are actually responsible for educating the family and utilizing those finances for supporting the family. That also has an impact in terms of access to digital services, and we know that some of the women have not been able to access some of these digital services. So Mark, I know IFAD is working on this a lot in terms of investments and into supporting inclusion, but what are some of the priorities that IFAD is actually working on to improve access, especially to this demographic that is ensuring that women do have access to digital financial services? If you can just 2-minute response or 3, some of the initiatives that IFAD is working on. Over to you, Mark.
Well, it's a good question. And in all of our programs, we have what's called mainstreaming objectives for women, for youth, nutrition and climate. So there's always a strong component on in all our programs on women. And in our rural finance programs, we tend to focus a little bit more on outputs, trying to get equal access. That's different from outcome. And I think this is the real key here, is how do we allow poor rural households, or how do we incentivize their change of behavior? So an outcome-oriented change. We do that in a lot of different ways. We do it through financial literacy, where we target equal participation with women. And we also target it, we also provide gender action learning quite a lot, the GALS system, which allows for a conversation between partners to understand the economic advantages of planning together and thinking together and working together within the household. And that would include, obviously, a strong component on equal access to financial decision making. So this is very important in pretty much all of our projects. As some of my colleagues have been pointing out to me, they say, look, savings and loans groups, for example, community-based organizations, for example, are heavily organized around women in many, many countries. So that example that I talked about in Malawi with Kumo, I mean, most of the savings and loans groups are women. And they may not all own a phone, but for example, for the group formation, they have one phone with a Bluetooth speaker, and they all sit around and they learn how to form the group together. That's very empowering, even though they don't all have the phone. Now, if you look at the most recent statistics on ownership of phones, which is very, very important, even simple phones, not just smartphones, it's rising, ownership among women. It's still quite low. Not quite low, sorry. It's still lower than male ownership. But there's also another issue that we run into quite often. And that issue is, women are often taking a loan, but they don't have use of they can't determine what the use of funds is. And that's a problem, and that's hard to track. So we have targeting issues that we really have to work on. And that's the same with phones, because sometimes women will not have access to the family phone, and they'll have one phone. And then there's also a digital divide between the smartphones and the regular phones, and we can deliver a lot more services on a smartphone than we can on a regular phone, particularly financial literacy, particularly information that's going to help the smallholder producer to market information, extension services, financial services included. And so this is a real challenge for us. But in all of our projects, we have these mainstreaming objectives. So I'll leave it at that. Over.
Thanks, Mark, for that response. And you've just set the scene, and you just preempted my next question that is in the chat. Great issues to do with community-based organizations that often are so organized, even though they're using manual ways to record the transactions. But even though they don't have access to digital technology, but the fact that you have already incentivized behavior change in terms of how they come together, how they work with different, even though they're manual systems, but the fact that they can be able to come together, have one common goal, and work on this and be able to, and this is something that we can leverage on. So Nika, there's a question in the chat that is asking, what is cooking to digitize saving group transactions? I know you've worked a lot in digital payments and supporting digital transactions, but what do you think is something that or should be or is already being done to support and digitize these savings groups in different communities? Over to you, Nika.
Thank you. Actually, the savings groups are the traditional way of how people access a saving account and basically creating a safety net for themselves across Africa. What we saw was that during the COVID pandemic and in early days, where these chamas, or they call them chamas in East Africa, or tanteens in groups that in West Africa, couldn't meet in person, it was hard for them to maintain that regular face-to-face connection, but also to contribute and hold each other accountable, etc. We've seen a lot of connections between traditional players trying to digitize this, MFIs, etc., trying to get their hands into it. I would say a lot of donor money has been injected into digitizing savings groups. And where as a whole community we got it wrong is that we go in and we're like, let's look at you guys and what the interactions that are happening in the physical world, and let's exactly replicate that in the digital world. And we leave behind a lot of the context that is around this. A lot of the context is that technology is not the only solution, and you need to have a tech and touch balance. So that means that you need to think of technology where it makes sense, but have a high touch approach in communities like this, because trust is the key ingredient in these saving groups. How do you ensure, how can you shift that trust from something that they know and the community that they know into something that is digital, when there are basics of like trusting a digital channel for using it as a means of transfer, etc., is not in a place. We have seen a few startups getting into the space. Matantin comes to my mind, and there's a few actually in Uganda. The name is escaping me, but there's a lot of collaboration between mobile money providers and also these startups to make sure they can digitize these habits that are happening physically. But for that, you need to have the trust of the community. You need to have a high touch balance. You need to be present, and you need to recruit from the community, and that's the main ingredient to make these things work.
Thanks so much, Nika, for that response. Speaking about high touch approach and trust as a key ingredient for digitizing or working with the different groups or communities, there's a question in the chat that is asking about local cultural context as structural barriers when it comes to remittances spending. Pedro, and also maybe Dilp after Pedro responds. how have you seen this as you're designing different projects, for within on remittances, how you have seen the cultural lens playing part? Are there any examples that you can provide in terms of how this has been looked at from an empowerment point of view in terms of also supporting development? Over to you, Pedro, and then we can.
I'm sorry, I'm not understanding the point of the question. What?
Local cultural context and how
cultural. Yes. Well, this is. I would like to second something that that both Dilip and Nika have said. And this is in regard to the digital hype. I did say digital remittances are here to stay, and we really stand by that. But as Dilip's mentioned, yes, we are still in a very low base. But the trend has, as I think, has reached a critical point. There's been a tip there, and if we even go back 20 years ago, and we saw the system going just from a couple of money transfer companies to where we are today, there was also a tipping point, and I think that tipping point for digitalization is here, but it's going to take time, and it boils down to exactly to the point that is being made in the chat. Is, well, it's not just a question of tool. Projects should not just be about digitalization right now. Prior to COVID, there were projects on linking remittance to financial inclusion. These needs to continue because this has not happened. As Dilip was saying, be it international or domestic. International, it actually makes it a little bit easier to do that because you're attracting bigger funds. There might be more bones here for institutions to grab on, like, oh, Forex, maybe I will get into this. And this is enough to bring them on board and then see other benefits. But the truth is this needs to continue. Digitalization is just a tool. It's just a mechanism that will allow you, if done well, to do better what you were doing previously, right? In this case, linking remittances with financial inclusion. And I think the cultural changes, they do exist. Oftentimes what we see, and I think Dilip will second me on this one, particularly with diaspora investment, every diaspora member has a tendency to say, we are very different. Oh, yes, in that country works like that, but we are very different. We want different things and so on, which in many cases is true. But the fundamental needs are the same. The desire to contribute to your home communities are the same. They might be exposed in a different ecosystem. They might be facilitated. I'm Portuguese. The diaspora from Portugal is a different stage. They still want to invest. They do that. They have more facility to do that. It's easier. But the sentiment at the end of the day of supporting your community is still there. So we need to deal with these differences. When we're dealing with rural or urban is also very important because, as it was highlighted also by you, the savings groups, for instance, there's a touch aspect in there that if it's not replicated by digitalization, you're just going to fail. And then you're going to blame it on the group rather than on your initiative. And this is typical, I think. So my point here is you need to take this thing into consideration. The remittances has been discussed. I mean, I've seen Dilip. I think we've seen each other, for almost 20 years now, almost on this. And it's true that we resize the same thing. So you might ask, why is it not taking off that more rapidly and so on? It's because of these little nuances that sometimes we see that are not fully understood, that are needed in the equation, and it might block because a lot of parties, I would say the private sector needs to understand the business opportunity, but also the differences. If you're trying to do diaspora investment, you need some investment prior to creating models to support this impact investment, as we call it. So yes, in short, after my longer response, I think the cultural differences is absolutely important to integrate those because they do have a cost. They will impact the models that you're going to promote. But I'm very confident that since there's a common denominator among a lot of the diaspora and a lot of remittance families, this is absolutely doable. And I can say this because it's been done before. If you look at development of Southern Europe, it was based on that and it worked. So, and other communities as well. So I'll leave it that in short. I don't know, maybe Dilip, if you wanna contribute to that.
Thank you. Just a quick thanks, Pedro. I completely agree with you. Looking at the cultural dimension, it's not often that one talks about it. I think in the sociology literature you do hear about it every now and then, but usually it is very critical. Critical meaning critical in the sense of criticizing remittances, and that would be for the huge expenses during weddings and funerals. And in terms of the shows that in some countries they have for, the beauty queen shows. I don't know if you have heard about that. A lot of money is spent, really a lot of money is spent on those things. And that gets highlighted. Not sure if we should be focusing on that. Culture is something that you don't question. You can inform people, but you don't question. And remittances, that's a general point. You don't tell people what to do. You try to influence them indirectly. So that, I think, the important part. And the moment it is culture and you begin to lecture them, forget it. It's not going to work. Quite likely, it would be exactly the opposite effect. So that's one word of caution from my side. Then another cultural aspect that I have seen, weddings and funerals is one. Actually, that comes up a lot in the case of Comoros in particular. I don't know why. Comoros always comes up. Then there is the other one about Hawala channels. This was a hard way of learning. By the way, what a beautiful thing Hawala is. I mean, I know I'll get fired for saying that. Hawala is very, very useful. And in the context of, let's say, countries where women don't go out of the house because of cultural reason, Hawala dealers bring the money to them and hand it over without looking at their face. I mean, there is something to be said about that. So there are, cultural influences on channels of remittances, usage of remittances. And we talked a little bit earlier in my presentation about the gender aspects of remittances, the uses, perhaps even the choice of channels. Then on diaspora investments, definitely there must be a huge impact of the culture, and we haven't fully understood that. What we know about diaspora investments is that there is a huge amount of, sometimes we have called it patriotic discount. So in the case of, it is well documented in the case of Israel, and then to a lesser extent in the context of India. Israel has been raising about $1 billion worth of diaspora bond financing from its diaspora since 1951. So you can add up the years and see how many billions that would be. And all the years, 1951 through 1991, until 1991, interest rates on Israel bonds was 4% in dollar terms. That was a time when in the 80s, US dollar rates went up to 15%, right? Interest rate. US Treasury rates went up to 15%. The Israeli diaspora bond rate was 4%. That is an indication of the patriotic discount, so to say. So there is a huge amount of financial equivalent or subsidy or discount attached to the diaspora's desire to help the family back home. And if you consulted with them, and so if an origin community consulted with the diaspora and pitched a project or a program that pulls them at their heartstrings, it's quite likely they will give the money for free, no interest rate. They might even have a gift element in the principal itself. So something to be aware of. By the way, the converse also works. So if you are a country and the diaspora has become diaspora because they did not like you or you kicked them out, and you want to issue bonds, then you have punitive interest rates too, meaning that it just doesn't work. So it goes both ways. So there is, I think, the impact of culture and cultural norms, and perhaps related to this stretching a bit about attitude towards the country today and the current management of the country, the managers of the country, attitude of the people is impacted by cultural norms, I think. Let me stop there.
Thank you so much, Dilip. Before I ask the next question in the chat, I just want to emphasize something you have said about as you look into culture, we have to take into consideration that we can only inform, but we can only influence, right? But we cannot force it. We cannot force systems. We cannot force solutions on people. We have to understand the local context and see how we build these solutions around that. Which takes us to the last but one question that is asking about demand. Nika and Pedro, you've talked about bundling services. In the tech world, we call it bundled services, where you have insurance, loans, and other services on such kind of a service offering. Is there demand for such kind of solutions from the field, or is something that as practitioners we're thinking that that's the best approach for us to look at delivering of these services? So, Nika, from your private sector perspective, and maybe Pedro from the development perspective, what has been the demand on both? So I'll give 2 minutes each to.
your income is based on daily wages, then you will not be able to send money back home. And this was a key worry at the forefront of their mind. So what we did, we partnered with an insurtech company called Inclusivity Solutions. They're a startup based out of South Africa. We also partnered with one of our longest partners, MNOs, called MTN in Rwanda. And we offered loyalty insurance for anyone who is sending money out of Rwanda. If you send one remittance, you'd be covered for 1 month, and that's a hospital cash coverage. So if you're hospitalized, then for each night that you're hospitalized, you'll get a certain coverage. And the more you send, the higher the coverage would be. And what we saw is that we grew the size of the pie. These remittances that were coming through basically us because of this loyalty insurance product grew by multiple folds. We've seen the customer base actually doubling. We've seen the amount of remittances being sent increasing by 80% or so. And all of that is taken away from that gray routes and informal and cash-based remittances. And insurance, again, is a very advanced financial service that you offer. It's something that most people don't wake up wanting to get insurance. And if you offer someone insurance that they have to pay for in the beginning, they won't see the value. So it's an approach which is a stepping stone approach. You get them to start signing up to the loyalty-based model, then thinking about the sustainability of that model. You bring in options to purchase additional coverage insurance. Now you have the basic coverage. Would you like to purchase accident coverage? Would you like to protect your family, increase that coverage to more members from your family? It has been a very successful pilot. We are looking forward to expand that and work on that with support of IFAD in that corridor, but also once we have a business case, we can take it to our MNO and MTO partners, and given our footprint across the continent and globally, we can expand that to all of our partners to be able to offer that insurance to all the remittance senders and recipients.
Thanks so much, Nika. Pedro, I don't know whether you can say in 1 minute.
Yes,
yeah.
Let me just
to wrap up.
This is a reality that actually we give it a name at IFAD. We call it the silent demand. So it's a demand that is there, that exists, but sometimes often those that actually push for it don't even know about it. And as Nika said, it's a gradual thing. The demand for remittances that existed, Banks didn't see it. MTOs filling that niche more than 20 years ago, and it worked pretty well. Beyond that, now we see a very different ecosystem. But yes, there is demand for financial services. Every survey that you're going to do will show you that. But if they're not exposed to the right products, how do you express that demand? And this is why that gradual effect that Nika was saying of is so important. We've done several projects with insurance by digitalization, bringing e-wallets in Pakistan. For instance, in Malaysia and Pakistan, we've done this. There was a demand, but it's a cautious demand. That doesn't mean that everybody's going to be affluent to that. They want that, but they're still, like anybody else, risk averse. So it's gradual. The e-wallets worked. Then to that, you bundle it with insurance, with maybe microloans. Is it a microloan or a nano loan? Things like this that you need to basically suit for the needs of the specific community that you're addressing. But yes, there is a demand. And this is why, again, the role of the private sector when they feel that niche is because there is a demand that there is, and it needs to be in our case, we call it pro-poor, pro-profit. Because if it's just to give them the services that are their own need, it's just not going to work. It's not going to be sustainable. So yes, demand is key. And this is why I think in every other project that we've been financing, I mentioned the 50 or 60 in 50 countries, it always starts with that, to try to identify the demand and the potential demand further down.
Thank you. Thank you so much, Pedro. And I would like to thank all the panelists for the great insights that we have gathered today. I know there's a lot to be discussed, and we hope that we'll still come back one day looking at some of the progress that has been made in this space. On this day, let me give back to Gladys to introduce our last session for today. Over to you, Gladys.
Thank you, Brenda. To our audience, if your question was not answered during the Q&A session or you need more information, please contact us via email to the email addresses that John is sharing in the chat. So thank you, John, for taking care of the chat today. Now, please join me welcoming Hakima El Alami, Director of the Payment Systems and Instruments Oversight and Financial Inclusion Department at Bank Al Maghrib, the Central Bank of Morocco. Hakima's department is responsible for conducting national strategies related to payment systems and to financial inclusion, and for the implementation of regulation and the oversight framework of financial market infrastructures and means of payment. Hakima joined Bank Al Maghrib as an executive in charge of financial analysis and corporate ratings, and also assessment of quality of the private debt instruments within the context of central bank advances. Since 2003, she was appointed as a manager in the Monetary and Exchange Operations Department, where she spent 13 years in charge of cashless means of payment and payment systems oversight. She holds a higher studies diploma from Conservatoire National des Arts et Métiers and a diploma of advanced studies in economic organizations engineering, complex systems modeling from the University of Aix-Marseille. She is also alumni of the Fletcher School Leadership Program for Financial Inclusion and Tufts University in Boston. Hakima, the floor is yours. Thank you.
Thank you, Gladys. Thank you for this introduction. Thank you again for the invitation and the opportunity given to me to give the closing remarks for this interesting webinar. First of all, I would like to thank all the speakers for this rich and interesting dialogue and highlights. Financial exclusion in the rural world remains a real challenge for developing countries. This population suffers even more from this exclusion because of its territorial isolation and the socioeconomic and climatic condition, which can be very harsh. In order to pull this population out of this vicious circle of poverty and disadvantageous condition, it's essential to launch national initiatives and policies that support digitalization as an essential lever to facilitate access of these targets. Indeed, digital innovation in rural financial services has the potential to be a game changer for achieving sustainable agriculture and global growth. smallholders, farmers, and small SMEs in developing countries often lack the required investment capital and access to financial services, as well as the digital and financial literacy necessary for success. Thanks to innovative digital financial services, rural people will be able to have access to financial service without having to travel and at a lower cost. Just to illustrate, farmers will be able to have access to credits and saving to finance their activities or to deal with emergencies. They will be also able to make quick payments to their suppliers, and via insurance tailored to their needs, they will be able to insure their harvest against the climate hazards. It's also important for women who should be able to build up saving to start small businesses or cooperatives. Last but not least, poor families will be able to receive money transfers from their relatives very quickly and also at lower cost. That's very important. To do this, it's necessary to face several challenges that digital finance can encounter in rural areas. In particular, the lack of interest of rural population for financial services due to a lack of fixed income first, and the difficulties in fulfilling the KYC prerequisites. The lack also of internet penetration or low penetration of smartphone, but also the low level of literacy or particularly financial literacy in particular. In this regards, it's important to emphasize that the national initiative and policy to be adopted must be accompanied by bilateral support from the public and private sectors, whether in terms of investments in infrastructure, but also in regulation that will facilitate the use of digital financial services. In this, I talk about simplified eKYC. It's very important. Consumer protection regulation is also very important to promote digital financial services, and also the design of offers and products which must be adapted to the needs of the rural population. Also, digital financial education, which will facilitate the comprehension of the use of these digital financial services, but also to increase the awareness about risks and how to avoid them. Thus, our colleagues from IFAD shared how in the new IFAD rural finance policy, innovation and technology are recognized for fostering the emergence of a wide range of inclusive products, services, distribution channels, and business models. Innovation in this area include micro-insurance, as I thought, for corps and weather-based insurance, micro-leasing to algorithmic data-based lending. Public and private investors are also exploring capital pooling innovation, including a blended finance instrument to satisfy different investor return expectation and risk tolerance levels. They also highlight how linking remittances to financial inclusion is where the real impact on development of these flows resides. Receiving remittances are often the entry points into some sort of formal system, and this experience contains a huge potential for financial inclusion. Indeed, remittance corridors with digital payment option have increased every quarter since 2016, and they have tripled in the past 4 years. In this context, I felicitate IFAD for the National Remittances Stakeholders Network, launched with the aim of support the development of the remittance markets and address the impact of COVID-19. This platform for dialogue gives the opportunity for the public and the private sector to meet and discuss trends, updates, challenges, and opportunities in the national remittance markets and share good practices to promote development opportunities created by remittance flows through innovation, partnership, and scalable products, while fostering the digitalization of financial services and promote financial inclusion. The national call for proposal for a partnership with the remittance industry launched in Morocco, my country, by IFAD, is also a good initiative to replicate. It aims to finance innovative projects focusing on reducing costs, accelerating digitalization, promoting access, and deepening financial inclusion. I will notice that the proposals are currently under evaluation, and IFAD and the government of Morocco looks forward to learning the results. As a regulator, also, we should put, and I see this question in the chat, we should, as a regulator, put pillars or an environment to promote DFS and digital financial services. In Bank al-Maghrib, and for that matter, we start by setting up modern financial infrastructure that could support the development of digital financial services on sound basis. We also focused on interoperability, which is necessary to avoid market fragmentation and cost augmentation. Thanks to our latest reforms, we introduced also non-bank institution, which allow to open payment accounts or transaction accounts and offer new digital payment services like mobile payments. The main goal of these reforms is to introduce new competition in the markets in order to reduce costs for customers and to offer a new product which is tailored for people's needs. Besides our effort to set up the common rules to mitigate the risk and ensure also consumer protection, we have also capped the for mobile payments, the interchange fee to lower costs and thus to allow large adhesion of merchants, as a merchants are also a key component to set up a real digital ecosystem. Furthermore, we are working on the implementation of Greenback initiative jointly with the World Bank in order to accelerate the adoption of digital financial services and more particularly those of remittances. The objective of this initiative is to improve remittance markets and digital remittance markets and reduce its costs through the promotion of digital financial services, among other things, given the important role it plays in economic development and poverty reduction of the recipient families, especially in the rural areas. To this end, the initiative adopted a consultative approach with stakeholders intervening through 3 axes. 1, the development of financial education programs to promote the responsible adoption of financial services for remittances. 2nd, the promotion of available, adapted, and inclusive local remittance services. And the 3 pillar is the improvement of transparency and consumer protection in remittance services. To conclude, I would like to mention that with new opportunities, we are also faced with new challenges and responsibility. So governments and the international development community must work together toward greater client data protection and security, consumer protection, to avoid over-indebtedness and stronger regulatory oversight and compliance mechanism. I'm sure that with the commitment of all stakeholders and adapted regulation, adapted offers, we will all together succeed in this long journey of facilitating the adoption and the use of digital financial services by excluded population in order to enhance their financial inclusion and to reach our ultimate targets of inclusive growth development without leaving anybody behind. Thank you, Gladys, and over to you.
Thank you so much, Hakima. And I hope that you can share the points with us so that we can then share it with the members of the IFAD Innovation Network, because you covered a lot in your closing remarks. Before saying goodbye, I would like to invite you to join us in April for a special session of the IFAD Innovation Talks, when we will be delivering a free training on accelerated innovation through storytelling. I would like to thank our speakers, the teams at the IFAD's ICT for Development and the Innovation Unit, and our main host, the World Bank, for making today's session possible, and of course to our audience for joining us today. If you would like to stay in touch with us, please write to us to any of the email addresses that John is sharing with you in the chat. And if you would like to join the IFAD Innovation Network, please click in the link that John is sharing in the chat. Thank you so much for joining us today, and we look forward to seeing you again soon. Goodbye.
Thank you. Bye.